Okay, hello and good day everybody. It's June 10. You're looking at Nasdaq. Okay. First, let's take a look at the daily chart. I have measured the previous day's range. That's 75%. The price came there and having a return. Let's look at regular trading hour. They opened with a gap. Last day it closed at 102. Today it opened at 853. That's the range. New day's opening gap. Let's go back to electronic trading hours. I had a position last day. It's recorded. I will publish it soon on Nasdaq. All right, that's over here. The first attempt was a loss. I got stopped at 431 below this candle, I guess. Yes. Then the price entered into May 6 new daily opening gap. 4 contracts long and I closed 1 to 2 and slightly beyond above this high. $606. Same strategy we're looking to do today. It just took out the London high. Almost at 50% of previous day's range. That's also close to 75% of new daily opening gap. Let's go to regular trading hours. New daily opening gap, 50% is here, 75% is there. London high is swept. There you go. Okay, at the lows, let's go to 5 minutes. I want to see what I have at the lows. Only London low. The feed at the highs looks better, almost equal highs. I would like to keep my bias based on what happened here and the opening range. Impulsive uptick in momentum. I would like to keep my bias long, but usually I don't have any bias. So let's go to 1 minute chart. I would like to check the order flow. Okay, the point of control 486 is at the highs. CVD shows a new high. It's healthy. No divergence here so far. I have to wait for 10 a.m. I don't have any setup based on current structure. Right now I have 173 contracts stuck at these highs. This high is very close to London high. If it was slightly higher, taking more liquidity, I might have shorted it. Let's go to our trade. This is 9:30. This is 10 a.m. After the bullish breakout, the price came into uh, 75% or 25% of this bearish leg, which is, I guess, it's the mean threshold of this bearish fair value gap. There it is. That's our first clue for a bull market. A bounce from this bearish fair value gap. We had a bullish breakout. It's obvious, came back, tested, and now it did it again. Alrighty. Here on this tail, it returned to the open price of today. You guys can see that. That's also another bullish sign. I would like to join a bull if I see the price return to 25%. If I see a return here, I might get into a long position. Already extended very high. No choice but to wait. These are the liquidity areas that I should have marked before, not right now. Trading requires sitting behind the chart more than 10 hours a day. I missed this liquidity, and there you go. The market is bouncing up. After this impulsive move, my entry should have been somewhere inside these trap buyers, right there at the mean threshold. That's the opportunity that I lost. So it's very important to keep an eye on the chart all the time, sit behind that. It can be also exhausting over time, very exhausting. The new day's opening gap is almost filled. I would like to see what else I have up there so I don't miss another opportunity. We have a short-term high This is 1 hour chart. It's too much. Let's go to 50 minutes time frame. Some sort of equal highs in here. Very big sell-off. I would like to add the VWAP at the high. VWAP always helps with finding these levels much easier. So it is at the VWAP. For the third time, it can go higher. When VWAP is tapped multiple times, the price can go higher. We have a short-term feed in here. I call it fragile feed. I know my internet connection is slow. I am in my summer house. My apologies. I know the bit rate is slow and you guys have some kind of interruption, but I guess the entire summer would be like this. In this way, I apologize. Maybe I can decrease the bit rate to 5,000. Let's keep it 6,000 this time. That's what the normal should be. 6,000 bit rate is attacking, going toward that fragile feed. Also contains an order block over there, or trap buyers. If I could do 5 minutes chart, maybe I can find that in the 5 minutes chart. More about that. That's the fragile feed. There it is. Yes, June 9, 10 a.m. bearish sell-off. I can use this PD array or this liquidity area. That's the previous day's high at 874. This red is previous day's range, 25%, making this portion of the chart interesting to go short on Nasdaq. Okay, I'm glad that I could find the level, because I don't sit behind the chart that often. All right. How far is the price to that level? Let's see. Fragile feed is here, and the other one is way up here. Okay. I can't believe I lost this opportunity. Holy shit. Anyway, that's okay. That's okay. In the book, there is a psychology book, Big Loser Wins. I read the book, just finished it. Same as Mark Douglas, this book also talks about probabilities, fear, greed. But there is one issue. We know the system, right? Right, guys? We know our system. We know how to trade. We have defined our setup. But sometimes we miss those setups, like the one here. And that would affect our probabilities. I'm thinking to move my system, move my trading system into AI using Claude for that purpose. I've heard we don't need coding, for that matter. All right, let's look at this sell-off. We have two bullish candles. Let's look at order flow. big sell-off, they are reloading. I would like to enter a short position here if I can find a good entry. Let's see if I would get an entry. Let's go to the chart. It didn't fill me in. I left the pending order here. It did not fill me. Okay, let's make this bigger. First trade is always 1-to-1 to build liquidity. The second pending order. Too many lines on the screen. So the new daily opening gap, I don't need it anymore. That's 50% of previous day's range. Okay. So stop is here. It should be right there. You have a chain of bullish candles, only two. One trap sellers. We had a massive sell-off. London high is taken. It did not get to that fragile feed that I mentioned. It could go there, no doubt. But now we are having a sell-off. I wanted to enter in this wick. It did not get me fill, so my fill had to be here at 50% of that range. 659. It did not give me that opportunity. Now I have a chain of bearish candles. The price should not have much of issues with getting to 50% of that range. All right. My entry should have been here. This should have been my entry. In that case, 1-to-1 would be here and my trade were closed by now. That's why a precise entry is very important when it comes to profit taking. Now my eyes are locked on this price. Let's activate the prices in here. My eyes is locked on. How much is it? I have to make it bigger with my eye. I can see it. Let's make it 10. Yes, my eyes is locked on $64. I don't want to close above it. If it close above it, that's problematic. And the next one is the mean threshold of these two bullish candles. Let me look at order flow. Oh my God, 906 contracts. What the heck? Who sold 906 contracts here? Holy shit. Check out these guys. 906 contracts. Actually, it's 1,003 at $29,110 is executed right there. And they have reloaded more positions in that vicinity. 906. So this mean threshold should hold. My stop is above here. How many contracts are at the highs? 110, 101, 98. Okay, those are normal, kind of normal. Now the point of control shifted to the highs. That's of course more than a ton of contracts. Very big bullish candle. Let's go back to our trade. It closed above 50%. All right. Like to pour some tea for myself. I'm peeking at order flow. $10 a.m. is here. Okay, I can move this stop to break even. And remove the sell limit. I ask you to remove the sell limit. I am canceling this order. Let me check my trade cop here. Yes, it is canceled over there. It didn't even... Jesus, this trading view is so glitchy. Okay, it's playing games there. It is playing games. Let me remove myself so I can have a quick smoke. Looking at order flow. Not much in the order flow. Yep, took the stop at break even. Whenever you're ready, trading view. Yeah, the trades on copier are closed. Going back to that portion. Let's look at the order flow until trading view does its glitch. Okay, it's back to where they left the majority of their orders. Camera off. So let's see. Is it gonna surpass this, or is it gonna... Where is it? Here we're having a wick. If TradingView allows me, I would like to have one sell position in here. Doesn't work. Nothing works on TradingView right now. Okay. Tap into that liquidity, which had around 1,000, I guess. Still, is it 1,000? Let's take a look. Let's go get close and take a look. Yep, 906 still present there. I don't know why TradingView is not working. Doesn't matter. Which over here, 906, they removed it. They removed, now they have 2. So let's see if this level can hold. I guess it executed finally. Now I can move my stop to where it is, which is here. And take one off. Right there, which I didn't. Oh my god, what the hell is happening here? All right, let's go to the chart. It's glitchy. It just constantly opening trades, closing trade, doesn't show the command. The 1-to-1 was there. 1-to-2 is here. All right, you see that it's not placing the trades at all. Placed it now. Stop is here. Entry is there. The price is still respecting the half of that bull trap, if it's a bull trap. If it's a bull trap. There we go. That's the half. As long as it doesn't close above it, that trade is safe. If it closes above it, then it's invalidated. The first try was break even. Now we're on the second try, but the second try is supposed to be 2 micro contracts. It opened 3. Big distributions at the highs. Now we're going to order flow. All right. There it is, our order flow 906. This can easily result in the price to go higher and do the same thing that yesterday did. Just keep going higher. Therefore, it close above it, we enter long trade. I mean, we will invert this trade from bearish to bullish. We just inverted. And see what we can do. Let's go to the platform. See that price action. Okay, it's insisting. Yep, that's closing above it. So in the order flow, it literally, we had 900 contracts here. Now it closed above it. So the uptrend can potentially resume. Yep, 245 more contracts came to the market. I can move the stop lower. It should not return. If it wants to go higher or lower, 200 more contracts came here. I will be ready to go long as soon as this stop is taken. Let's move this stop where it was. Okay. Let's look at order flow meanwhile, because order flow is providing valuable information now. 247, you see that it's about to go higher. Bulls are adding a ton of pressure. Okay, let's get ready to go long on this thing. So here's what's going to happen. Instead of stop loss, I'm adding 4 buy contracts, and I will add one, two, 3 buy contracts here, but not now. After it stops my trade completely. Yep, didn't came into play. $103 contracts also again. They went long right there, which is absorbed. Tough high. Very tough high. It's back again to the mean threshold. You guys can see that, right? Yep, we have a tail. That's another sign using the upper portion. This seems to be a bull flag now. Let's go to order flow for now. It's obviously, it is showing a ton of buy orders are coming into the market. You guys can see it's 906. That's very serious. This can potentially result in a very big bull run because they were not absorbed. They executed to pass through this liquidity area available on heat map. In case of making a new high, Nasdaq might rip higher very fast. All right, let's go to the order flow to trade. There it is. Now it's getting angry. Let's look at order flow. 108 contracts is absorbed there. 184 85 sell contracts are being absorbed. That's a very choppy high. POC is right there. And the valley area high, I guess, the POC and the valley area high, both are in here. Okay, what happened there? $10 a.m. Tiny sell orders 103.93. With the valley area high slightly changed, the point of control is now 1223 right here. It's constantly changing. Let's go to our trade. That's 10 a.m. first fair value gap. So far it is holding. The price won't do anything. There won't be a downtrend if it doesn't close it. As long as it's above it, it can trigger my stop, but my stop once it triggers, it also opens 2 micro contracts in the opposite direction. I should exit maybe 1 contract here, just minimize the risk. Because the price is lingering in that portion of the chart way too much. See if I can get out at least 1 contract. I lost the opportunity to get out that trade. Now what we have here. What do I have here? I have these two candles that took out the high. Let's see the row. $1,200 contracts at that high. This is good education for me. Let's see. Stop for this trade is below 10 a.m. low at 29.30. Let's look at the risk to reward. It's a bit high, to be honest. Yep, 961 more contracts came at the high. This one did not come into play. Let's see how this breakout strategy would work in my favor, or it doesn't. look at the feet, which was above that high. This could result in a reversal. I would be ready for that as well. I moved this stop below the 10 a.m. first fair value gap. Stop is wide. I don't like it, but I will move it to closer if I see big sell orders coming to the market. The second partial, which is the last trade, 3 micro contracts, is on, still at the min threshold. I will get out 2 at 1-to-1. Let's look at order flow meanwhile. The order flow shows super big orders are coming at the highs. These are not normal. 961 buy, 906 buy, 409 buy. These are serious buy. These are institutions buying. But now I see the price is dipping. I might invert the trade again. I closed that position. Let's look at the new trade. I will flip it again. I guess it's a flipping day. Let's remove these arrows from the screen for now. So here we go. Have to increase the contract size. For the day. That was the last one. And in, let's see. Let's look at order flow. This is gonna be one heck of a day. Well, well, well. More buy contracts came at the highs. They are willing to pay even more prices. Point of control is here. Where's my stop? My stop should be all the way below 10 a.m. I am confused, really confused now. That's the value area high. Ionic. Why did I go long if 1.5k longs are trapped? That's the thing, they are not trapped. When I see 961, that's not a trap. That's some serious. 906 in here, 961 in here, that's 1000. That is not a trap. Based on experience, that's just continuation. That's continuation. This is no longer a trap, because the structure shows that it is using all these down close candles or these sell orders to push the price higher. They are what they are doing is they are trapping sellers in this area. Only because I see contracts around 1000 contracts at the highs, 409. You guys can see that, 409. This is a different playbook. I will note they are trapped if the price closes below 10 a.m. first fair value gap. That would be here, I guess. If it closed below this, then I would know I can go bearish. Every time it is forming some kind of both bull and bear traps, I show you. I show you. Why do I believe they bought there? We had over here, we had a thick layer of pending orders. They wanted to push above these pending orders, 906 contracts. You see that? If they didn't want to buy, they didn't have any reason to aggressively press the buy order to go beyond this portion of the chart. This portion that is stop losses, maybe pending orders. When they push as much as this with 906 contracts over and over again, I mean multiple times, that indicates they really want to push the price higher. Where is the previous day's point of control? Is here, 1029. But until it's above 10 a.m., I have to be long. If it closes below this, then I can go short. This is a slow uptrend on this playbook. You know, again, now it's forming another bearish structure. It formed a bearish structure here. It formed a bearish structure here. But the push, the amount of effort that they're pushing, they are also getting the result. CVD is making a new high, and so does the price. So effort is there, but there is no absorption from the sell side. The last 2 days, the market has been acting this way. Usually it doesn't. But the market condition for the last, yesterday was the same, for the day before that was also the same. They were constantly playing the same playbook. But let's look at my order. I closed it in loss. Now I open new sell positions. Now I am short. You're welcome, Anik. But you might be right. It might turn bearish, it might turn bullish. Again, we have another bearish structure. Now it's at 10 a.m. Fair value gap. Wicked into it. It is back below based on order flow. It is back below those big orders and the point of control. Let's go to order flow. Now the POC shifted a bit lower. That's again a bearish structure based on technical. $906, $961 made a new low for the first time in here. The rest, they were not making a new low. It closed below this, and it can go to 9 a.m. First fair value gap and take this low or attack this close. But I won't be placing any more trades because it really doesn't know. I don't know what's it doing. So that playbook I mentioned, still it didn't come to play. These big buy orders, now they are trapped. If it closed below it, they will be trapped. Okay, let's go to our trade. I have to add to my position. The ad should be 50%. Or maybe right here. Okay. Now again, it is closing above 10 a.m. You have this candle here now. Let's look at momentum. I'm going to look at ES. It wicked above this high twice. The wicks are big, kind of big. Let me extend this. That's the same VWAP that I mentioned. Is it gonna be a bull trap? Let's see. Look at order flow. Order flow is kind of synced. Okay, this is a good, now it made a new low on this candle, closed below it this time. Some sort of head and shoulders pattern. So the 5 minutes. 5 minutes is a sink. Those wicks tell a story because they are occurring above these 3 bullish candles. They are telling a story that sellers put limit orders above here. That's to mean threshold of this chain of bearish candles. As soon as it get there, it is showing some resilience. Let's look at order flow. Meanwhile, I should check my account statement. At 2600, 846. Oh my god, I am up 26, 3000. I'm down by $4,000 today, but my current unrealized profit is 5,900. So here's what I'm going to do. I'm going to close more in here. Yeah, saved myself. I saved my ass here. I truly saved my ass in here. I truly saved my ass. I have fucking saved my ass today. Let me calculate. So lost $488, lost $242, lost $863, lost $2,600. That's $4,100. That's $4,200. All right, gained $1,321, gained $1,651, gained $1,737. So right now I am down by only 516, and my unrealized profit is 840, 850. All right, that's good. I saved my ass. I truly saved my ass in here. I mean, oof, it's gonna have a super panic day. Alrighty, let's what does the order flow is telling us? 90 contracts, they are trapped. It did not take this low yet. That could be a sign. So what I want to do is I want to exit another micro contract there, if it gives me the opportunity. That trade is closed. All right, so where we are. Okay, let's look at order flow. Meanwhile, I check the statement to see what the fuck I have done today. All right. Let's check the account trades. I added $400 on the last one, so I'm down by only $100, and my unrealized profit is 462. I will check my stream later on it to see where I did wrong. Because I got chopped over there. If I bring the tradings, I really got chopped in the upper portion. Yep, the first one got out here. I inverted it. Sold, break even. I sold there, got stopped on this candle, sold again, got stopped here, but this was a reversal trade. Added, I closed manually right there, and then I went short. That short was 5 contracts here, 5 here, and 5 here, 15 micro. I had to add to my position to recover from that loss. Took out this low, returned back to the same fair value gap. Now it's having a bounce. So I'm down by $100 today. If it goes up and take my stop from, yeah, I was down by, I guess, $4,000. And that in the upper portion of the chart managed to recover it with the same strategy and staying calm. In the worst case scenario, it will be minus 100. What does the order flow is telling me? That there you go. Let's see if 10 a.m. can hold. Or it's gonna invert it. I guess my stop is above 10 a.m. There is one rule that I have, which I did not you started trading LVN edges, low volume node edges, where high volume areas transition into low volume areas, and it feels much more relaxing. I do the same for gold because the commission on gold is smaller than NQ. I also make that strategy on gold only, not on Nasdaq, because gold has consolidations and it does provide some choppiness around those low volume nodes, and it provides a very good scalping opportunities. That's for example, where is it? I have to log in my, one moment, let me log into my account, watch the order flow. All right, let's get back. All right, and now I logged into the gold trading account. There we go. Trading execution marks. There it is. This portion. That's the strategy I'm using. The low volume node becomes, then suddenly it shifts to high volume nodes, and that means we're gonna have this uptick in momentum if I'm long. So I scalp using my margin in this area. For example, for crypto, if I log into my account, if I have to use my phone to log into my Solana account. For Solana account, I am using the same strategy that I used on Nasdaq, only because these pairs, they have big moves. These pairs have a bigger move. That's why I like it that way. How many ticks is this? 1500. Let's look at order flow. I want to see if there's a change. All right, respected. It didn't even get close to 10 a.m. fair value gap. Made a new low. CVD also made a new low. We didn't get there. Now we can move that stop above this high. That's a good strategy. I can recover from that 100 loss too. Let's go to trade. Let's go to trading view. I want to move the stop here. TP is the mean threshold, maybe the upper portion. That's the 1 to 2. The stop was here. That's not 1 to 2. But it's okay. Should make a new low. Should go a bit lower even then. There's 1 to 2. Yep. Trading with order flow Onyx is like having 4 eyes, not 2 eyes. It's like trading 3D, seeing the market with 3D. If that playbook I mentioned was coming to play, the price could easily tag to this and that high. That thing happened yesterday. Let's go to yesterday in order flow. I show you that it continued. They did not trap it. Actually, it resumed. Let's go there. From yesterday, if I have yesterday, yep, I don't have yesterday. If I switch to 5 minutes, I guess I will have. Not here. Not there. This portion. I also marked it. You see that 500 absorption, 516 absorption. And then what happened? The downtrend continues. When I see trades bigger than 400 contracts, that sends me a signal about we might have a big continuation. It was here, right there, 423. That's the playbook. When it breaks below, when we have a breakout, either bearish or bullish, with a massive trade like this, 423 here, 423 here. So in these 3 candles, 2 candles, we have more than 1,000 contracts. And look what happened. The downtrend resumed with speed. Same playbook today, but it didn't come into play. But even they were even bigger. 909, 409, 961. This is not a joke. This is big, super big players buying. Maybe JP Morgan, Goldman Sachs. It's them. Oh, it took our last trade. Took out our last one. So let's log in and see how much we are up today. Let's do a simple calculation. Calculator. I'm happy now. 617 plus 399 gain plus 1731 gain plus 1651 gain plus 1321 gain. All right, 5700 gain. All right, 5700. Now that's 26,000 loss, 863 loss, 242 loss. No, 5700, 2600 loss, 860 loss, 242 loss, 488 loss. Yep. What did I do? I can't even make a simple calculation. 488, 242, 863, 2600 minus yek set do yek. Yep, 1500. You see Onyx? When the reward is bigger than risk, Always a good. That's the best strategy when the reward is just bigger than risk. All right. Over here we see sellers have reloaded their positions, but again, caught me off. Point of control was here, 209. This to me was a bull flag. Caught me off guard. Put me down into $5,000 drawdown. We survived it on a reversal. There's only one option to avoid something like this is VWAP. I had this mentor. He mentioned, let's go to the chart. I had this mentor a few years back, taught me about VWAP. He mentioned when you have a VWAP, you see that's a VWAP. Should I make it thicker? When you have a VWAP, do not trade around the VWAP. But over the years, I have understood that if I don't trade around the VWAP, then I will lose the big move, like now. If I don't trade around the VWAP, here, here, and today it was here, then what am I supposed to do? Do you guys remember these VWAPs? So I do trade around the VWAP, and it's pretty damn good. You see that here, got close to it here, but this one is set to high. If I set it to close, it gives the highs very well. That's the high. The price got close to VWAP. I like VWAP. I guess Onyx, sometimes it's inevitable to get chopped. Yeah, I guess Onyx, sometimes we can't fight it. And that's the thing. If it was on my personal account, I might didn't have enough margin to add to my short position to recover from that loss. That's also another issue. Prop firms have the same issues. If you're wrong and you face a loss, then there is not enough margin or threshold to recover from that loss by the third or the fourth order, even if the player stick to their rules. I feel lucky today. It's my lucky day. This feed came into play. This one right here. This one came into play. Okay. So I know that we have a ton of buy orders coming at the highs. Now the price is below that. We have the London low. Maybe we can catch also reversal I can use my $1,500 gain today to go long with 1 or 2 micro contracts. Seems we have enough volatility today. We had some news going on. What was the news? I know today we had important economic news. Yes, it was CPI day. That was before the market opens. Cryptocurrencies are good to trade nowadays, but still, you know, I set the alert to this VWAP, waiting for it to tap into it. I forgot to set the VWAP at the lows because I can be a buyer at these lows. If I set it to the low, all right. You guys can see that the price again it's rejecting the VWAP. When the VWAP and the price is close, it's okay to let the price exceed VWAP a little bit. That's totally fine. I want to be a seller here. Even a little bit higher than that. The data we have on cryptocurrencies where Atas platform provides, or the DOM, the heat map, it's much more beautiful. There are also free services for that. Velo.xyz. It provides heat map, big trades, all free. You don't have to pay a dime. So those who are interested to trade cryptocurrencies using order flow, that is there is one option. Okay, getting to the mid threshold. To mark this. What is it? This is June 10. $7 a.m. Third one came into play beautifully. This was the London high. Now this is June 10 NY AM. All right, if I see tiny close, all right, that's good. Maybe I can buy here. Now, if I want to buy, first let's look at order flow without making any rational decision. 1 minute. All right. What do we got here? We have the value area low that shifted to the lowest price is currently above it. Sellers still present. Here the price made a new low. CVD made a new low. All right. This low is slightly above this low. So does CVD. There's just a little bit of divergence there that I see. There's one divergence there. Okay, we got divergence in the volume. And we have big buy orders at the highs. Okay, let's try to go long. If I want to go long, first and foremost, I don't see any big orders in comparison to these guys up there. Now I have two bearish candles. If I want to go long, that would be above this high. Nothing else above this high. So let's go to trade. I'm talking about these two bearish candles. These two. No fair value gap, just a tiny one in here. That would be the buy order. That would be the stop. Again, return above it, came short to London low. As we know, the London low, London usually sets the high or the low of the day. That's the character of London. It came short to London low by $50. Start a chain of bullish candles, that's aggression in the market. Close above June 10, 7 a.m. inverted fair value gap, that's this candle. However, I would like to do more professional and do this, because here we have a chain of bearish candles. Yep, respected the half. That's one signal. And all right, inverted that fair value gap, respected half from this pivot high to this pivot low, which are bear traps. Over here, before we have a bullish run, I have two bearish candles in here, a few of them in here. If I box them, the price should not close below 50%. If these bear trap sellers are gonna remain trap sellers, which it did not, just a little bit, just a little bit. So we're good. The pending order is set above this bearish candle. It's at the place that the market can provide support, giving the opportunity or the chance to move the stop to break even very fast. But in this case scenario, where would be the profit? My profit, I like it to be this bullish candle. Here I will check how the price would react to half of this bullish candle. It should not close above it if it's bearish, and if it does close above half of this bullish candle, which is right there, okay, that's the bullish candle. Don't extend it, make it blue. All right, if it close above it, then I have to invalidate this trade because this is my target. But I would like to enter a trade and target this before it even gets there. I have another bearish scenario. If it takes my order and come short above this high, I will close at break even, and then I will participate in a short order targeting London low. So the first scenario is like this. Wait for the price to activate my pending order on a way up to the mean threshold of this bullish gap, bullish candle, because it didn't trade there yet. Option number 2, actually I can move it here. Option number 2 is if I enter this trade, and it goes higher but doesn't close above this. If it doesn't close it, that's a bearish sign. Once I see a wick and some sell-off, I would like to use this portion of the chart to go short and target London low. That's the two scenarios I seek for this trade actually. I should have a quick look to order flow. On my big trades, I want to put it to 100 maybe. 110. Yeah, the buy limit is in a good place. That would be, what's the risk to reward? If I enter here, my TP is here, and my stop is at this low 1 to 1.8, which is very reasonable. Okay. All right. There we go. Since I'm up today, I said I can add 2 micro contracts, right? So let's do one in the mean threshold. Do one slightly lower here to have the same, almost the same average price. Okay, I add it manually. If I add the second one here, that should be pushing the price slightly higher. So All right. Once it activates the second one, average price would be somewhere here. Okay. Come on. All right. Now there is our average price. I have two bearish candles there. Let's see how the price reacts to half. One goes off at 1-to-1. Now let's have a quick smoke. I will do the same. Once the price takes the London low, it's the same entry method, same measurement. We'll do it over and over again. Look at order flow meanwhile. Just a little bit. Half is here. This candle has a wick. That wick is synced with half of these trap sellers. If they're trapped, the price should respect it. Once this order is closed, I will move the stop to here. Make that trade free. Don't close below it. Okay. Okay. Flow. Wait. Order flow shows we have two big orders came here. One is 67 contracts. The other one is 60 contracts. Let's see what they can do about the price. Let's close one in here. And then I will move the stop below this. Let's move the stop below that. Or to break even. Okay. Yeah. I closed one partially with just a tiny one. Now I move my stop slightly there. I would like to target 1 to 2 is enough. If it doesn't make a new high, then the probability of the trade decreases significantly. What happened here is, so I got 70% of the stop on this trade, only 70%. Therefore, now my stop is 30%. If I lose, I will lose 30% of the risk. We have this mean threshold. If the uptrend stops below this close, and if the downtrend stops below this, doesn't make a new high, or even wicks in here, I can go short and target the London low. That's the plan. Going to order flow. Over here we can see two big orders came into market. Regarding these sell orders, we have consistent sell orders. The Valley area low is right there supporting the price. That's the Valley area low. As long as the price is above the Valley area low, I have some confidence in the trade. Just a quick scalp. I really want to see how the price reacts to this high. a new high, that would indicate some sort of break of structure, but we still have the mean threshold of this bullish candle, which can be a pain in the butt. I'm talking about here. You guys can see that the sellers have reloaded here with 1,000 contracts. Holy crap. So sellers are in here, and now we are going a bit higher. Let's go to trade. Okay, tap to the high. Now I can move the stop below this candle. It should not close, it should not return maybe to here to break even. You see it's coming short. Now I have this bearish candle and the upper portion of June 10, 7 a.m. inverted fair value gap. Can you close above it and give me 1 to 2, or should I just be content with 1 to 1? So 1 to 1 is here. You see that? It's coming short. I know that. It's coming short. It came short, did not take that high. But eyes are on this bullish candle. Half should be respected in order to make a new high. That's a good boy. Now I can move it below this tail. Another attempt. Oh. Can you make a new high? Half is here. There's a thin liquidity. You should go. Let's look at order flow. Do we have big sell orders coming to the market? Not yet. Not yet. Look at the volume, all remain a new high. There's absorption. Volume all remain a new high. Yep, you have absorption in here, guys. So I'm not gonna risk more moving the stop below this tail. Order flow shows volume, there's effort, made a new high. Price did not make a new high. There we have absorption, more buy orders are coming in. Let's go to trade. There we go. Moving the stop below. Yep, you see that? Okay. See that? Let me check my trade cop here because my stop wasn't at 807. My stop wasn't there. Let's see. No, it closed both trades with slippage. That's okay. All right, now it's going to London low. If I can get an entry here, that would be very nice. Don't go without me, just have a tiny bounce. All right, stop. Goes above these equal highs. But now that we have equal highs, after it takes London low, we can go long. So for now, stop goes above this, targeting London low, but that's fine. After London low, we can go long because now we have equal highs. You can target that. This is the same playbook I did yesterday. Let's go to regular trading hours. Let's look at those trades. Here, same thing that I did now. I went long, got stopped, but not on break even this time. Took out the low. While we had equal highs, I went long and then closed all the way up to this portion. So right now it's the same playbook, but I don't want to enter at the lower portion. I don't want to enter here, or at the mean threshold. I want to enter here because that's close to my stop. Let's go to electronic trading hours. All right. Let's watch order flow. I want to log into my account and see how much was this trade. All right. So first trade was $89. That's good. Second trade was $57. Let's add them to our portfolio. We're up by $1,600.78. All right. Let's look at our trade cop here. Everything is okay. It was a textbook. Look at the CVD. CVD, we had effort. That's why it closed and trailed the trade. And then all of a sudden, it respected this high. Did not even get close to the mean threshold of this bullish candle. And what it did was ripping lower, took out this low, and now it wants to attack the London low. My trade at that position, which is, where did I left it? I guess I left it here at the value area low, is valid until it takes the London low. After it takes London low, I will invalidate that trade. Let's go to trade. Well, we see it is almost to London low. Therefore, I am canceling this order. Alrighty. I would like to go to daily and 50 minutes charts to see what I have in here. Well, 50 minutes chart shows 1, 2, 3, 4, 45 minutes of selling, but I would like to go there and check the 5 minutes. All right, let's go to 5 minutes to find a liquidity area that could be interesting. It came short to London low. Look at that. So that trade is still active, still valid, but I will check the order flow. We have a 3. Yep. That's the previous day's low, very far, respecting the London low. I don't like that. All right, there we go. Well, what is this? This is June 9 trap sellers. All right. Let's look at ES. ES did take that high. See that? All right, I can short this. Oh, 80 contracts sold. I can short this now. Just come a little bit higher. So I would short you. Please, just to come a little bit higher, and I want to short this. Let's look at order flow. You see, my pending order was here, targeting London low. Now, if I go back to order flow, you guys can see over here, we have 80 contracts sell to the market. Buyers are pushing, but did not make a new high. I want to make one sell order. Maybe leave this stock at the current high. It's fragile. It's very fragile. Fragile stop. I wanted to enter here, right there. I wanted to enter here. Move this stop above the equal highs. But I lost that opportunity because I removed that pending order and I was chatting to my girlfriend. All right. Sell orders came in. This is one of those situations that I should move this stock to break even very fast. So let's see about that. As soon as it closes above 50%, oh, this wick, screw it. It came short to London low. That's a signal though. With equal highs. Let's look at ES. What the hell is ES doing? Did the same thing. Same tail. And look at took that stop. Let's try that short one more time. Move the stop above these equal highs. Let me check the order flow. Oh, the order flow shows aggressive buyers have stepped into the game. Okay, that was my mistake. I will close it. Moving the stop even tighter. How much was that loss? From here to here. So to gain that back, this should be enough. All right, came short to London low. It did not take that. Let's look at order flow. Is there effort to push the price higher? Okay, stop is taken. Now I can do one buy order and target. For now, let's target half. I might be able to add. Let's look at order flow. I see there's a ton of effort. Triple highs, came short to London low. Just respecting that. Sellers are also stepping in. I can invert that trade very fast and target London low if I have to. The risk to reverse kind of sucks. A bit higher maybe. Let's look at ES. Did not make a new high yet. Okay, now it's ripping higher. I don't want to hold it more than 50%. I can find new opportunities to go long. It took it that high. Is there sell orders coming to the market? Oh, where am I? Oh God. More absorption. More absorption there. I have to constantly switch between these screens. ES did not take that high. I don't want to keep it. Okay. Let's revert that trade. Let's invert that trade. Expect that high ES did not make the high. London low is still there. Did not sustain. Let's look at order flow. Big buy orders came in, still have the effort. The price failed to close above it. Now we have one sell order. Oh no, we have divergence at the lows. I'm doing mistakes here, doing a ton of mistakes here. Let's see. Let's move this stop much lower. No need to risk too much. It's a lot of arrows. Let's remove them. Okay. Let's have a quick smoke. Moving stop lower. Let's get a partial here to recover some of the previous trades losses, or at least make this one free. Look at order flow, what's going on there? Not much. Invert that trade. Close lower. I will press sell button again. Okay. That wick was a bastard. Let's look at order flow. Remove that for now. Okay, let's look at order flow. Meanwhile, I'll look at the statement to see what the hell I have done the last few trades. You guys look at order flow. I will look at statement. Let's bring the calculator. Lost 102, lost 60, lost 101, lost 104, lost 15, gained 178, up by $1,400. All right, up by $1,400. Okay, let's see if I can get another short order out of this trade. I guess that's enough. I will wait for the price to take the London low. That wick bastard. I will wait for the price to take the London low and then I do something about it. Let's look at ES. If ES did not take those highs. All right. Okay. So in this portion, I damaged my portfolio by how much? $160, yep, by I guess 120, 150. Still up by $1,400. 1,474. 1,474. Okay. All right. Now let's wait for the price to take the London low. Then we'll see. So let's see what we have done today. Let's have a recap. Up by $1,400 and 74, almost $1,500. We tried short. First order, we got stopped on break even. Second order, we got stopped by stop loss above this high. We tried long because we saw big orders coming into the market on this breakout. On the way back on this bearish candle, I went long. Then one more break even. I went long because we had 1,000 contracts coming at the highs. That would indicate the price could go all the way up to June 9, 10 a.m. bearish sell-off mean threshold. After this reversal, I got out here below this low. That was a full stop. Now to me that's a reversal. 3 bullish candles. The price closed below it. Over here it closed below the box, which is below these 3 bullish candles. That's a break of structure. I went short 15 micro contracts. inside the lower portion, and we managed to recover from $4,500 loss, and that added up by $1,500 plus. So with 1 to 2 risk to reward based on stop, and also adding 5 more contracts to the game, we managed to take this bearish leg. It resumed, went up. That's the last, I guess that was the last micro contract I closed at the mean threshold of this bearish inverted fair value gap. That's June 10 a.m. inverted FVG from today. The price came into the same area. We had a bounce. Once again, we had a few chain of bearish candles. It broke above it on a bounce on this candle. I entered 2 micro contracts. I got exit with 70% of the stop here, and the second one slightly above our entry. You guys can see that, slightly above the mean threshold. I tried short to target London low, got stopped, shorted at $75, got stopped at 826. Tried to short again, but this wick, kind of my stop was very tight, got me out. Got short with 2 micro contracts. Is that 2 micro? No, it's 1 micro. 1 micro is it took my stop, and only 1 micro, and we took this leg below this low. Now I am waiting for the London low to be taken. We have a jagged price action in here. Of course, we have a swing low, came short. The price can potentially increase and go higher from here without taking the London low, but I'm not going to risk my earnings today. Already up by hit my target for the company today. Let's go to order flow and read that one because it's a good education. Going to order flow. The short base was because I can see the effort. Let's have these big trades tiny smaller. Let's do auto filter. The reason I went short because the CVD or cumulative volume delta shows the willingness of pushing the price higher, but as you guys can see, the effort is there, but the result isn't there. This wick tells me we're gonna have a sell-off. My mistake was I did short it in a good price, but I did not leave the stop above that high. That was my mistake, which I got out on this wick. Sometimes tight stop comes with a price, and I paid it here. Anyhow, I would rather to keep my losses short, because if I'm wrong, then I'm not gonna take the full stop. The price respected half of this bull trap. This candle is a complete bull trap, trading below it. London low is slightly lower, somewhere around here. We have a, that's from last day. We have a ton of buy orders coming here, which is slightly, I guess, below the London low. You guys can see we also have a ton of liquidity over here. How much? 85 contracts, but you guys can see that there's a ton of liquidity. The heat map shows that. The price will probably go to hunt these. I don't know where it would stop, but wherever it does, I would like to join a long order after it does that. So currently price shows absorption. Sellers are absorbing all these buy orders, which could result in the price to at least go down this much. I tell you, this is the range. If it goes down, that would be half, at least half of this range. Half of this range is exactly where these big buy orders are. These big buy orders or big sell orders. Let's look at our order flow. If I go to bid and ask or delta colored, yeah, over here we have trap sellers. Allow me to zoom in for a better visual. There we go. More zoom in, more zoom in. There we go. At the mean threshold, we have 498, 222 trap sellers. Right in the vicinity, we also have 40 pending orders in here. Those pending orders could be stop losses. So right now I'm monitoring this area. I will see, what is it? Oh. The market is slow. Time tells it's lunchtime. Yep, it's 12:23. We had a ton of orders today. I guess I should close for the AM session and return during the PM session. We can take a break, have a rest, and then come back later. So if I see a reversal, as always, I will rejoin live. I will come back to trade because I don't want to miss a bullish leg up. It's obvious that we have a ton of bullish orders at the highs, and they might have their pending orders at the lows to accumulate more. So stay safe, stay observant, and always protect your capital with stop loss. I will see you in the next stream. Don't forget to check my trading journal, learn the patterns. I explain the patterns. Kind of every playbook is there in my trading journal and tape reading. It helped me a lot to go back and watch them. Helps me to memorize these setups. Until next stream,